Hey guys, it's Leonard here and welcome to another episode of Finance and Coffee, and welcome to my brand new set. I would like to introduce my new cactus. This is Jonah and this is Sebastian, who will be accompanying us today. So there has been talk from the Reserve Bank of Australia to increase the interest rate as early as June 2022. So what does this mean for people who has a mortgage and renters? Stay tuned to find out, but first coffee. So during the COVID-19 pandemic in 2020, the RBA has lowered the cash rate to an all-time low of 0.1% to stimulate the economy. And because of this record low interest rate and a lot of government grants kicking in, there have been an increase in demand to build houses or to purchase a property where they will be able to get a home loan with a record low interest rate below 2% during this period. So this has also caused a major supply shortages, bringing the cost of material and labor to increase. So inflation has also increased around 3.5% since the end of December 2021. So as the RBA seeks to control the inflation to between 2 to 3%, so the only way to do this is to increase the interest rate over time. There is a widespread speculation of the increase in the interest rate as early as June 2022. So what does this mean for people like you and me? In WA, the average home loan size is about $430,000 with an average interest rate of 2.42%. If the interest rate goes up by 0.5%, the repayment will increase from $388 per week to $414 per week. And if the interest rate goes up by 1%, you will need to fork out an additional $53 per week, bringing the repayment to $441 per week. According to REWA, our vacancy rate in WA has been below 1% since January 2021. And with the borders opening on the 3rd of March, there would be an influx of internationals, local migrants, students, and returning residents. This event, in addition to an increasing interest rate, will drive up the demand for rental properties. So as interest rate starts to move up, the growth of the house prices will slowly to ease as new homeowners and investors will be faced with higher interest rate repayments over the next couple of years. So this will force the homeowners to rethink twice before taking up any mortgage or loans in the next couple of years, and they might prefer to rent instead. It will be in your best interest to always count your costs to ensure that you have enough cash flow to fund either renting or buying a home by getting a mortgage. And if you'd like to see what your financial options are or to refinance your home for a better rate, speak to us and we will definitely be able to meet your financial goal. And thank you so much for listening, and I hope to see you next time.